it's just interesting to kind of see this stuff play out, and it's happening so quickly. I think if we look at, say, a year out from now, we're going to look back at this time and be like, man, things were changing so quickly, and be excited about it and to kind of see where we're at. We're still a ways away from a digital deed or, card title.
Yeah.
But I don't think we're as far away as it probably feels right now. At the same time, I think it's just kind of this weird period of quick advancement.
Welcome to the Wiser Retirement Podcast. Are you curious about the latest news in the world of cryptocurrency? I'm Casey Smith. Today, I'm joined with Robert Swarthout, founder, CEO, and portfolio manager at Teton Crypto Capital. Each week, we bring you practical advice on retirement investing and planning for your financial future. Don't forget to subscribe to the podcast wherever you're listening. Let's get started. Hey, Robert.
Good morning.
There's been a lot of things happening in the world of crypto. What's Bitcoin at right now? I don't even know.
Bitcoin is down a little bit right now. It's at 114. It's been all the way up to 123, 124.
Okay. I saw 112 last, so I'm pleased with 114.
Yeah, it's, the last, call it last week or really the month of August, it's been pretty volatile. July was pretty good. But it's, it's just.
I have a advisor group that I meet with once a month on Monday, and you should have been at the last one. The whole crypto thing came up, and it's like all these conspiracy theories and everything else out there. But, and I should have known the answer, but the Genius Act, which is now law.
Yeah.
Tell me about that.
So the Genius Act is the law that specifically talks about stablecoins, like how they have to be constructed, that they cannot pay holders interest is one part of that.
Right.
That it has to be backed by, dollar-based products. So cash, treasuries, those kind of things.
And the whole point of a stablecoin, in my mind, is that you have a world of crypto. Instead of moving out into your cash, you can easily move into a stablecoin.
Correct. And this is
a holding
mechanism
tied to the dollar.
In theory, right? Yeah, it's stable, right? It doesn't change in value when you have it, and they generally are very good about that. But I would say a use case that we haven't really talked about tons on this podcast really gets into the word, the acronym DeFi, which we may have mentioned. But it's this whole decentralized finance, and it could be like you are part of a computer software system that you want to trade from one exotic coin to another. You might use stablecoin to get into that. You're not going to be able to take your dollars from your bank account and get into DeFi directly. Coinbase is working on that, but right now it's kind of a step removed from the normal crypto that people might be buying on a Coinbase or Kraken or something like that.
Yeah.
So, that future's coming. And it could be that you want to take your stablecoin and buy an NFT. Well, you're probably not going to do that on Coinbase or something like that. So stablecoins have their use case for retail, and then I think they have a use case in commercial cases. So, I think we've mentioned in the past that Starlink is using stablecoins to get their subscription fees back from foreign markets back into dollars. They were tired of dealing with wires and more exotic currencies.
Yeah.
Because I think they're in like 120 countries now.
Oh, wow.
They're covering a lot of different places, which I don't think it's 120 different fiat currencies, but it's something up there, I'm sure. And they were basically converting local currency into stablecoins and then bringing those back to the U.S. Basically instantly versus the days or weeks that it might take to set up a wire transfer.
And the banks, you think, would be very angry about this?
Banks are, I don't know if the word angry, they're hesitant. They're, I think, threatened. I think there's probably a lot of, you might use emotional words there. Part of me says they should have seen this coming. They had 4 years really underneath the Biden administration to get ready because everything in crypto was being held back.
Right.
It wasn't going to be held back forever because the rest of the world was moving on. The writing was on the wall, whether they wanted to realize it or not. But it didn't make it in our notes today, but like Ripple and Circle both have separately filed for bank charters with the OCC. It's a big deal.
It is a big deal.
And the American Bankers Association, I guess, has the ability to kind of speak up and say something. And they're suggesting that they pause those applications while the banks figure out what they need to do. Well, the banks should have already figured out what they need to do, in my opinion.
Right.
They've had time. It should not be penalizing Ripple and Circle for their inability to, plan ahead.
Yeah.
So, but yes, I think that,
So the Genius Act was basically putting guidelines for all.
Guidelines. It's the most basic of basic guidelines. Stablecoins are the most basic thing of crypto. They can be on different networks. You can bridge them across from one network to another if it's the same stablecoin. But at the end of the day, we needed to get that done. And then as part of the House was the final portion of Congress to kind of vote that in. They also voted on the Clarity Act and a third bill about anti-CBDCs for the U.S. So they passed all three of those. So now it's back to the Senate. The Senate is on recess in August, or most of August. And when they come back, they're going to supposedly be working on the Clarity Act, which is the market structure bill, which the rest of crypto really cares about.
Yeah.
That will, I guess, take it up a notch on the regulation for the rest of crypto, or actually add regulation for the rest of crypto. And I think that's when things get exciting. A lot of the things we've talked about, goodness, when we started this talking about crypto 4 years ago on this podcast,
right?
A lot of those potential concepts would be allowed to be attempted once we have clarity around this. So you end up with regulators that aren't going crazy around you. So,
and then what was that's where the Clarity Act comes in.
Absolutely. Yeah. So the Clarity Act, Ian, just, rules of the road effectively.
Yeah.
And
for all of crypto.
And, it helps define things that should make things easier. And I have a note here, the Clarity Act. So part of what people want to understand in crypto is something a security or not a security? That's the big debate all the time.
Which is the Ripple lawsuit is all based off of that.
Yeah, that's what the SEC was attempting to, go after them about, which was proved not to be true. And I think really it comes down to the way the SEC has handled crypto in the past made it seem like no one wanted to be a security because you have to deal with the SEC and they weren't willing to deal with anybody.
Right.
So everyone's like, oh, I want to be a commodity. Well, and the CFTC has seemingly been friendly. Bitcoin is viewed as a commodity. Under Paul Atkins, they haven't made it a clear declaration, but he has been on CNBC and say that Ethereum is not a security. I don't remember him going as far as saying it's a commodity. It basically implies that. But the Clarity Act would help clean all this murkiness up. And if a blockchain is decentralized under this act, it would be a commodity, full stop.
Yeah.
If it's not, it's a security. It's a very clear, and like what makes it decentralized? Well, they're trying to work about rules around that. So I think that there's a lot more to go. But I've even seen timelines from David Sachs, the crypto czar, saying how by the end of September, he feels like they should be at a committee and potentially in the Senate voting on this, which seems like basically only a month and a half from now,
right.
Which would fly by. But, I would welcome it with open arms. So.
All right, so let's move on to crypto IPOs and filings.
Yeah, this is getting a little bit more into your wheelhouse here. So Circle's been public for probably 2 months now, 2.5 months. They've had a crazy run up that I did not see coming, admittedly. And
what did they do?
Circle is an issuer of the stablecoin USDC, and that is 100% of their business.
Yeah.
It's an interesting contractual thing that they have. So I guess as part of trying to get usage of their stablecoin years ago, they ended up in a partnership with Coinbase. Coinbase contractually receives roughly 50% of Circle's revenue as a fee. So in a world where we're in, the interest rates are at, 6%, 5%, stablecoin is a good business to be in because legally you cannot be paying interest to the holders of it. So you get to keep it yourself.
Yeah.
And when you're sitting on a $50 billion worth of treasuries and cash, that throws off some good money.
Yeah. Right.
Over time, I think obviously interest rates, in my opinion, come down so that those margins get squeezed. And then Coinbase takes some of it. So to see where Circle's been trading still blows my mind. It's a crazy high PE multiple. Again, no financial advice here, just kind of interesting to watch this thing go up. It was almost the only way outside of Coinbase for traditional investors to get exposure via a stock to the crypto market. So I think there's a premium being paid there for doing that, or the price has been run up for that. But even more recently, Bullish, which was a much smaller company, it's a Peter Thiel-backed VC-backed company that went public, and they had like almost 100% pop in their first day of trading too. So it's like the market seems to want more of these. There's some coming down the pipe. Grayscale, which was the issuer of a lot of those publicly traded trust that before we had ETFs of Bitcoin and Ethereum,
Yeah.
You could get exposure that way for accredited investors. And then BitGo is another company. They're a custodian, institutional grade custodian. They custody some of the Bitcoin and Ethereum for some of the ETFs. So, well respected. So we're going to see more of these. I just think it's interesting to watch how the market's been receiving them. At first, I was like, oh, well, I'm not sure how this will go. And now I'm like, man, does the market really seem to have an appetite for these and running up the price? And heck, just Circle's been out of the market in the market, 3 months, and they just the other day did a secondary offering, get more shares out. So.
Before we get back into the episode, have you ever wondered why annuities keep coming up as a recommended investment? While they're often pitched as a way to reduce risk and secure your future, annuities frequently benefit the salesperson more than the investor. Download our free guide, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity, at wiserinvestor.com/guides. Now let's get back to the episode.
And then moving on to banks are now allowed to custody crypto.
Yes.
So I know there was a while where Bank of America was going to be able to hold Bitcoin, but that never really happened, I guess. And so now banks are now coming in full circle.
Well, I think the banks
it's probably only certain crypto, not like guess. Coinbase.
Yeah.
Otherwise, that's a direct competitor to Coinbase.
Yeah. If we fast forward years down the road, I think that we're in a world where you can't tell the difference between a Coinbase custody solution for crypto and Bank of America, B of A, Wells or whoever.
Well, probably force Coinbase to get more exotic.
Potentially, right? Or you might see Coinbase drift more towards the traditional side of finance too. I think there's going to be an interesting
offering mortgages and financial planning,
but with the twist of that it's all on chain. I think that I think they'll continue to use a technology shift or a perspective on it. But in this case, I think all banks that have been interested in crypto have been basically held back, and because they didn't have guidance or were basically allowing them to. But in this case, the Fed, FDIC, and the OCC issued a joint guidance allowing banks to custody crypto. That was like, when I saw this headline, I did a double take. I'm like, whoa, what? I did not have this on my 2025 bingo card. Right. I would have figured we had to have legislation in place. We have some with stablecoins. We don't have market clarity. Like, it just feels a little bit interestingly early, but happy to see it. But I guess the gist of the press release in guidance was basically stressing strict risk management, and the banks have full liability if they hold the customer's crypto. So basically, they put them on notice. I think is the easy way to say this.
So now it doesn't mean that you walk down the bank today and you're going to hold your crypto. Their own board has to decide if they want to take it.
Yeah, I mean, it's a business decision at that point if they want to go down that route. I don't know of any banks yet even talking about it. Talking about doing custody.
Yeah,
I think the closest I've seen banks and or brokerage houses talk about it is they're starting to set up their own exchanges, right? I mean, Charles Schwab has been relatively public about setting up and building their own system versus using or white labeling Coinbase.
Right.
But custody, I think, is a good ways away. Another example is JP Morgan recently said that they're willing to take and hold Bitcoin and Ethereum as collateral for loans.
Oh, wow.
So, this is the same company that Jamie Dimon works at. He for years said that Bitcoin was rat poison.
Right.
But here they are. They can figure out how to make money.
Right.
They'll show up to the party.
That's funny.
But yes, this is again, a headline. And before we started recording, I had mentioned about how certainly in the last 6 months, but really more 3 months, the shift in the news cycle around crypto has gone from, oh my gosh, here's some negative news. Where's the positive in it? To a bunch of positive, or like you're not really worried about every time you see news, you're trying to figure out what's negative about it, or like what the government's trying to do.
Are people being hauled off to jail?
Well, admittedly, the people being hauled off the jail probably may have earned that privilege, but at least the accusation wise with the SEC was a little bit challenging for a long period of time. So, but yeah, they've cleaned that up, and like we kind of touched on last time, the Ripple and SEC case, that is officially done at this point. We don't have to talk about that anymore. So it feels like a new chapter and page has been turned in crypto for sure.
Tell me more about this topic, SEC listing standards for crypto spot ETFs.
Yes. So obviously we have Bitcoin and Ethereum, and those have been in some ways bespoke in the sense that they've approved them kind of on the SEC's timeline, but like no one understood why it got approved when it got approved. I would imagine there was some political pressure to get the Bitcoin one done. The Ethereum one just kind of felt a little out of place. But now you have, last I looked, there's over 80 different applications for different kinds, whether it's spot ones or maybe some spot index ones sitting out there. So the SEC's got this pile of paperwork on their desk and is only going to grow. So I think the cool thing about this in particular is the SEC is being forward thinking, and they're trying to figure out how we streamline this process. So they've talked about a standard where, and it's not fully realized yet, but a standard where they're going to require futures for 6 months, whether it's on Coinbase or this CBOE for a particular crypto. So you have a futures product out there. And then if that happens, then it's a much quicker process to get a ETF approved for a spot crypto. I think the index ones are a little bit more complicated, obviously, but I think it follows the same path. And if it doesn't fit into that path, then it has to go through the standard 1940s, I believe, process. So which I think is normal. But at the end of the day, we are getting closer to having a bunch of products. Just I think yesterday. So there's a bunch of Solana and XRP ones kind of stacked up. They seem to be the most, I guess, desired ones to come to market next. And the XRP ones, the SEC seems to want to take their full process. And this is still the 1940s style process. They are basically kick the can until middle of October. So I don't think that we see anything. And at that point, it seems likely that it might be that kind of timing, might be right for it. So we'll see here in the next couple podcasts about this, but we're getting close. It'll be interesting to see the demand. Bitcoin, I think, was kind of obvious. It was the first one. And at the end of the day, the whole digital gold narrative, Ethereum has done okay the last month and a half. It's up, but it still, I think, struggles with the narrative about what's the use case for it. Solana may fight something similar. XRP, I think, at least has a company around it and a narrative that is for payments. It's for cross-border. Like, I think that it can build a narrative that is easily digestible and understandable by the traditional finance folks. So that may help sell it. So we'll see. It'll be an interesting fall, I think. So
you also noted here the SEC, speaking of them, are going to treat stablecoins as cash equivalents.
Yeah.
So that's interesting. I guess it's really not much different than a money market. You just have to make sure it doesn't break $1, right? If it breaks $1, that's really a bad thing.
Right. And rewind 3 years ago, there was some stablecoin issues. And I think that's where a lot of those fears came from about kind of setting up the Genius Act the way it was.
Yeah.
But yeah, the guidance, because before they had to carry literally stablecoins if a company wanted to hold it on their balance sheet as a liability, which is just bonkers. It's functionally cash, just in a digital form. Right. So now it is literally treated as, cash equivalent. So I think that it helps starting to clean it up. You're going to see more of these. The whole mark-to-market thing, I think will come in, and that helps. People like MicroStrategy and the ones that want to have these different digital asset treasuries.
Right.
Kind of helps the rules around that. And admittedly, I think cleans it up because some of this stuff is like, it had to do what?
How many stable coins do we need?
Oh boy. It seems like everybody and their brother, which is our next topic, wants to launch a stablecoin. So,
well, yeah, because I get like a 5% yield. I don't have to pay you anything.
Correct.
As the holder.
Yeah.
And I don't know what my cost of operating is, but I'm guessing it's fairly low.
Right. I think that just like with the early use of any technology, it goes from no one using it to a bunch of people trying to use it to some consolidation.
Yeah. Or interest rates at 2%. That might consolidate.
Right. It'll get people less interested in having to deal with it.
Right.
And 2% is a good ways away from where we're at, but that's the direction I think they generally head personally. But at the end of the day, I think that I don't get upset about the idea that we have a lot of stable coins. It does potentially create some friction in the system.
Yeah.
Because it's like, is my dollar the same as your dollar if we have two different stable coins?
Or are there other things that can be offered to make it more appealing to get one stable coin over another?
Right now, it's
all the same.
It's all the same. And I think some of the banks that want to issue stable coins are doing it because they want branding on it. So there's the marketing angle. There's it's not on this chain, so I need to make a stable coin that's on this particular blockchain.
Right.
But you end up in a world where you have a universe of dozens potentially of decent sized stable coins by market cap, and it's like, do you just all of a sudden start creating markets for those to be able to interchange?
Right.
It's just interesting to kind of see this stuff play out, and it's happening so quickly. I think if we look at, say, a year out from now, we're going to look back at this time and be like, man, things were changing so quickly, and be excited about it and to kind of see where we're at. We're still a ways away from a digital deed or car title.
Yeah.
But I don't think we're as far away as it probably feels right now. At the same time, I think it's just kind of this weird period of quick advancement. So.
We talked about uses at one of our very first podcasts that we did on cryptocurrency, and a lot of those uses have not come to fruition at this point. But I think this lays all the groundwork for it all to make sense.
Right. And we need market structure, Bill. We need some of these other building blocks, and then the innovators can go and try to innovate. Right now, they're a little hamstrung. In kind of a cool example of some of the technology might be used is the SEC is reviewing how KYC is done. Like it is an old process. Admittedly, it's kind of was reworked during the Patriot Act and all that kind of stuff, but they're potentially there's I think a subcommittee that is looking at using blockchain technology as the KYC process. So you may end up with a digital ID on a blockchain. Okay, say that happens.
Yeah.
Privacy issues aside, just put that away because I think that can be solved. But the idea is called zero knowledge proofs. So zero knowledge proofs is really like a system where I have all my identities verified in a blockchain. It exists, but outsiders can't see it. And you say you are a mortgage company. You want to know that I am at least 25 years old and what my street address is. You ask the system those two data points. I quote unquote sign a transaction approving it, and it shows it to you. It doesn't show you it's not like me handing you my driver's license. You can see my weight. You can see my eyes, all the things that are not pertinent, but all of a sudden are exposed. And a zero knowledge proof, all they get back is if they ask, is he 25? It's not you don't get my birthday back. You get yes or no. Or those kind of possibilities start to become a reality. And I think that's really cool. Because we live in a world where I think people want more privacy. The system's just rigged against them right now to allow that.
Yeah.
And I think over time we kind of get back to a little bit more of, feeling like your data and your stuff is you own it. So
interesting. Very interesting. I saw a report recently. This is not on cryptocurrency, but of how some people are becoming so dependent on chatbots, basically AI, ChatGPT.
Yeah, and all the things.
So much so that they spend 12 hours a day talking to ChatGPT. Isn't that crazy?
You start to wonder about the emotional side of it.
Well, they probably had some weird tendency, was just non-technical term, non-clinical term, before that. But we're just like moving to this digital age so fast. On a recent podcast, I was talking with William how AI misdiagnosed where the engine coolant was in my car. I was trying to figure out where it was. Yeah. But it told me with confidence, very wrongly, where it was.
Yep.
I had another conversation with a client about just the U.S. deficit and what happens if we keep doing this. And I said, I had this conversation with ChatGPT, and basically we can keep carrying deficits forever as long as you control inflation. And that's somewhat textbook, but it confirmed my thinking. He's like, well, that's funny. I had the same conversation with ChatGPT, and it said that the U.S. would be bankrupt and we would go out of business and everything else. And so it's like, well, there are biases in GPT that it wants to agree with you.
Right. Correct. Yes.
Yeah. So you had to be very careful of technology and how we use it and cryptocurrency. And hopefully there's really smart people that are going to put the right guidelines to make all this to make sense. But I can't imagine like an 80-year-old person right now trying to comprehend stablecoin and
not going to happen.
Yeah.
I don't remember if this made one of the previous podcasts. It's been 6 months ago, but somebody had let an AI launch a meme coin, and within 7 days it had like a $30 million market cap. And because the AI just kind of made all the marketing materials, started pushing it on all the different socials and stuff. And it's kind of like, well, cool, but I'm not sure we want it doing that.
Right, exactly.
Yeah. So anyways,
I'm sure it was doing some fibbing along the way.
Absolutely. And meme coins, that's largely just a bunch of fibbing.
Right,
but who knows? So
that's true. Yeah. That's hilarious. All right. Well, thanks, Robert, for the update. Thank you for listening to today's episode. If you're interested in learning more about Teton Crypto Capital, you can follow the link in our show notes here. You can reach out to Robert directly. If you want to learn more about Wiser Wealth Management and want to schedule a consultation to meet with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com or follow the show notes as well. See you guys next week.